As we head into the close, let's bring in Vital Knowledge founder Adam Crisafulli. Adam, great to have you on here. You know, the market has been, in a big picture way, kind of hesitating here for a little while. What's your read on what we're contending with and, you know, whether we're refreshing this move higher or it's looking vulnerable?
I think it's definitely looking vulnerable. Even before the events in the Middle East, there's just so much risk on the horizon. And we have valuations that are very elevated. So you don't have a lot of flexibility. There's not a lot of capacity priced in to absorb all this uncertainty. So, you know, whether it's tariffs, whether it's fiscal uncertainty, whether it's the debt ceiling, which I think is going to become a bigger issue because this bill is probably going to bump right up into the X date on the debt ceiling. You know, we've had a lot of poor economic growth in the month of May, pointing to a downtick in growth momentum. There's just a lot of uncertainty, a lot of red flags on the horizon, and valuations just don't really give you any room for error.
Yeah, you mentioned, you know, even before the geopolitical headlines, how do the geopolitical situation, obviously, it basically creates suspense. It creates this wide range of potential outcomes in terms of this conflict. But oil is not necessarily acting particularly alarmed. I mean, we're below Friday's highs in crude prices. What are the key things that you'd be watching to know whether this is going to snowball?
I think the biggest takeaway as far as U.S. markets are concerned is the inability of treasuries to really spike higher, despite all the geopolitical anxiety that we've seen in the last week, coupled with all this economic data that we've seen. Even today, you had a miss on retail sales, you had a miss on industrial production, you had a miss on the NHB housing survey, and you have this ongoing escalation in geopolitical tensions. Treasuries rallied a little bit, but the move is not as large as I think one would have assumed. And that just speaks to some of the upward forces placing pressure on yields, including fiscal imbalances, like I mentioned. You know, still a lot of anxiety around the inflationary implications of tariffs. So that, to me, is kind of the real big, notable factor of the last few days. You know, as far as geopolitics, obviously, oil is going to be the transmission mechanism. To the extent this becomes a broader macro problem, you know, like you said, we haven't seen any real supply disruptions out, the extremely fluid situation. But, we've been dealing with geopolitical uncertainty, intense uncertainty now for years, you know, whether it's Ukraine, whether it's the other conflicts in the Middle East, even India and Pakistan more recently. And markets have absorbed all that relatively well. And I suspect it's going to be the case again with this latest conflict in Iran.
So we have a Fed decision tomorrow. We're going to get the outlook, the dot plot. You mentioned, and this is important to note, that we are going to also get weekly jobless claims tomorrow because Thursday is a market holiday. What's your level of concern, I guess, about some of the softer labor data?
Yeah, I mean, a lot of the May data has pointed to, again, a downtick in growth momentum. So the jobless claims have been deteriorating, especially the continuing jobless claims. That's definitely a red flag. We'll have to see if that goes up further tomorrow. Just circling back quickly to the monthly report for May, the headline number on the establishment survey was decent, but there was a lot of weakness beneath the surface, especially in the household survey. So it really does suggest that there is softness in the labor economy. I definitely think that the Fed has reason to kind of pivot its outlook very modestly in a dovish direction. Just given all the data that we've seen, I think the messaging for the most part tomorrow is going to be relatively status quo. They see risk to both sides of the mandate. And given that the economy they think is in a relatively decent position, they're going to kind of just sit on their hands and watch how everything unfolds. You do have the risks on the dots, the 2015 dot potentially going from 2 to 1.